So why do companies go public? I mean, what are the exact reasons behind their going public? And in this tutorial, I'm going to list some of the most important reasons why any company choose to go public. So the first reason is raising capital. Now, this is the most obvious and popular reason why companies go public. So companies may want to expand their existing business, but sometimes profits of a company are not sufficient enough to expand the company rapidly. So the money raised by IPO can be invested into new plants and factories to increase production, or to use that money in research and development, or paying off old debts, or for any other reason which might help company grow. So companies who want to raise a lot of money for future expansion go public, and this is the obvious reason. Now the next reason is exiting venture capitalists. So an IPO is often used as a strategy by founders and venture capitalists to exit the company or sell at least some percentage of the company, sometimes in order to make a lot of money and sometimes to reduce the risk of losing it all. And in 2012, when Facebook became a publicly listed company, Mark Zuckerberg, the majority shareholder and founder, sold a bit more than 30 million shares, which was worth back then $1.1 billion. So founders usually sell their shares, but not their entire stake in the company. But on the other side, this is one of the most common ways venture capitalists make a lot of money. And when venture capitalists give money to startups when they are at their initial stages and they have a long way to go, then they expect money in return in some time future. And they may wait for years for a company to become profitable. So when the company becomes big enough, then the company goes public. And everybody wants the company to go public and sell shares at a price high enough that could make everyone a lot of money, and mostly VCs. So many VCs sell their entire stake, but some retain a part of it too, and that's why some have become billionaires too. Next point is liquidity. When the company is private, and not only company's major shareholder and venture capitalists, but also their employees have equity in the form of stock options, and these employees have worked really hard to grow the company. So when the company is going public, these employees cash in their rewards. And trust me, rewards are pretty high in some companies. Let me tell you a fact about the rewards. So have you ever heard about the name of Google's first employee? And if you haven't, then let me just tell you, his name is Craig Silverstein. But what's interesting is that his net worth is $800 million in 2015. I mean, it's way more than any highest paid Hollywood actor or even CEOs of many companies. So employees also want their company to get listed in order to sell shares of the company and get rich. So next point why companies go public is acquisitions or acquiring companies. So this is a strategy used for acquiring more companies. If a company is big enough to acquire small competitors, then the company, if not public, has to pay the other one in cash. Because no one wants to buy shares of a company who's not public, as there is no liquidity now. So how will they be able to sell their shares of the company to anyone if it's private? Although the shares are not worthless, but finding buyers for those shares will give sellers a really tough time. But if it is listed on a stock exchange, then it is a common practice to issue shares of their companies to other companies and paying a specific portion in cash when buying competitors. And this actually saves a lot of cash for companies, as cash flows are always required by small companies. Now, attracting top talent. So another strategy for going public is people attract a lot of talent or new employees by giving stock options. And this strategy is also used by startups, but sometimes it doesn't work because failure rate of startup is high. So the shares could prove to be no more than a bunch of worthless papers. But going public means if you don't want to take the risk of being in share market, then you can just sell the shares whenever you get. And that's another reason for going public. Now, the increasing value of the company or valuation. So, when a company goes public, then if the company is in a healthy financial condition, making profits and have good future prospects, then this makes company attractive and could place a higher valuation, which leads to increase in share price, which in turn increases the net worth of majority shareholders. So good companies also attract attention of big financial institutions like banks, hedge funds, and not only there is an increase in value of a company, but getting a loan is relatively easy, and venture capitalists want their shares to sell in the public as high as possible, thus increasing the valuation of the company. And sometimes the excitement among the public of privately held company going public is so huge that the company's valuation gets over exaggerated and making shareholders quite rich. So Microsoft during the dot-com bubble in 1999 was worth around $800 billion, which made Bill Gates' net worth $126 billion, inflation adjusted. And that's seriously huge. So everybody gets rich if the valuation is really high. So the next one is brand equity. So if the company is listed on stock exchange, then it increases the credibility of a company as more information is disclosed now and public can get to know the company much better. And also people could interact with the company management. People are now more aware about the products of the company and going public attracts the new group of customers. So this may lead to increased revenues and profits, which ultimately lead to increase in market share, thus becoming strong player in the industry. And the last point is pride. So sometimes the ultimate dream of, if not every, then most of the entrepreneurs is their company going public. There is this pride related with the company going public that when the company is listed on a stock exchange, then they are respected much as compared to the company with the same size, revenues and profits, but private. So CEOs also have this notion of wanting to be the CEOs of big publicly traded companies. They feel a sense of pride when they manage a publicly listed corporation. So these were all of the reasons why a company chooses to go public.